hugely underperformed is the PSUs and select pharma stocks. And thirdly would be the mid-cap banks. I think all three are now seeing a lot of green shoots. Strategic disinvestment would set the cat amongst the pigeons, and I think the PSUs are going to be huge outperformers. You've seen bellwether numbers from State Bank. I think Bank of Baroda, PNB, Can Bank will all follow suit. Gas utilities. So the CPSE ETF would be one of the best instruments to invest with a 3 to 5 year view. On pharma, I think most pessimism on contract and FDA approvals are through. The broader global outlook is increasing, with the US not being the mainstay and other countries taking market share. Indian pharma, by the way, in September had the best volume numbers on the growth side. So select stocks like Sun, Lupin, Dr. Reddy can outperform. And thirdly, like I said, mid-cap banks, you know, the likes of Federal, DCB, IDFC First, I think their numbers are going to surprise on the upside as they gather more traction from the NBFCs, with credit now looking to expand on the upside. So these would be three sectors. But like I said, if you are in good mutual funds, keep your SIP going. Only increase your exposure during bad times, which was the last 2 months, where we were one of the few contrarian who told you Diwali will be much brighter than most people thought.
You were bullish about 3 months ago. I think that call has turned out to be right. You're sounding very bullish for the next few quarters as well. One question, between the companies that have done remarkably well, and there are a bunch of those financial names, Bajaj Finance, HDFC, AMC, the life insurance firms, all of which are trading at very high valuations, which is the one, or which are the ones in which you still have comfort to put fresh money to work for some good returns, maybe not in the next summer, but in the next few summers?
Yeah, so I think insurance is a no-brainer, you know, and Neeraj, when 320 was the price of ICICI Pru, and I think 850 on ICICI Lombard, people were very, very pessimistic on what insurance and GAVA numbers are. That sector has turned out to be the darling of this year, of the last quarter. Also, you know, Neeraj, most pessimism was built into Eicher Motor at 16,000 and Maruti at 5,500. Lo and behold, in the last 2 months, they've been the best performing sectors. 21,500 on Eicher and 7,500 on Bajaj Auto. So I think Bajaj Finance will be one of our best. As a disclosure, that's been one of our best stocks. But I am not so bullish on those last 30 stocks because everyone owns them. I am saying the broader market is going to be very, very handsomely returning. 2020 will actually be a repeat or better of 2017. And there will be a lot of factors for that. Base effect, low multiples, market cap destruction at the highest all mean that good tidings are here. And we think the pass-on effect of low cost of money, mistrust allaying will set the cat amongst the pigeons. So in the top run, yes, insurance will continue to be a no-brainer. But in the names which are there, you know, which we still own, Asian Paint, Nestle, further investment here would be a little bit critical. So what you have, stay with that, but look at the broader market that could actually make much more money on a delta in the next 1 year.